Hey, welcome back everyone to another video in my Bitget trading series. I hope you guys have been enjoying it so far. I've had a lot of fun making these videos, and I think I've got some of the best pure trading content available on YouTube. Today, we're going to talk about RSI divergences and why I personally don't really use them. And I've got some other videos that I'll share too during this that will explain how I use RSI and how you guys can benefit from that, because I think RSI is one of the most used indicators by a lot of newer traders, but also I think it's very much used inappropriately because there's a lot of false information going around about it. Real quick, make sure you subscribe to my YouTube. Make sure you give this video a thumbs up, and I really hope you guys enjoy it. Before we get going, quick shout out to Bitget. They've been an amazing exchange since I've started using them about 4 or 5 months ago. I appreciate them sponsoring these videos. If you want to try out the exchange, you can get a 15% discount on trading fees. I have a link below, or you can find that link in my pinned tweet thread on Twitter. I also have educational videos that show you how to use the exchange on there as well. So make sure you guys check it out, and let's get into the content. All right, first off, real quick, you guys, if you want to learn how to use RSI more effectively, I do have an RSI trading strategy video right here in my Trading for Beginners video. I also have an RSI video in my breakfast trade series. So make sure you check both these videos out. I will put a link above here. I'll have it post up in the top corner so you guys can click on that and watch that after you're done watching this video. Okay, so back to RSI divergences, okay? And they are going to work better with the trend first and foremost. So if you don't know how to identify the overall trend, then you're going to be misled by a lot of these divergences. Case in point right here, you're going to notice that price drops and RSI has a divergence here, okay? And you can see that divergence lasts for quite some time. I mean, pretty much, you would have had a divergence all the way up here. Okay, so this would have given you a false divergence, all right, that broke down and blah, 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 all the way down to here before it finally bounces slightly and then breaks down even further, right? And you would have had a divergence this whole time here as price is lower. So that is going to be completely worthless and nothing you can do about it. Now, you are going to see, okay, that with the trend, it's going to be a little bit better. But again, here, you're going to have this RSI divergence. And with the trend, it's playing out a little bit better. Okay, you've got a little RSI divergence. But you can see here, how long does it take for this RSI divergence to actually play out? And how much effect is that having? How successful is your strategy here using that, right? Because again, here you can see that this whole up move here has RSI divergence, but if you're trying to short this, you're probably getting stopped out before that divergence ever plays out. All right, another example we're going to see here is you're going to see price break up. You're going to have that divergence, and again, it's going to break up even further and actually avoid your divergence here most likely. Maybe a double top would make more sense to me than an actual divergence, and then so you're probably getting stopped out again. All right, so using divergence, and right now we're just on a 4-hour chart. Using divergence, you can see how unreliable it really is. Now, I will say that your divergences may get a little bit more successful when they're in these upper zones. I personally still like to use like double tops and double bottoms on RSI, and like this one here you can see, okay, this would be a little bit better for me because it's more of a double top here, right here, okay? So it's technically a divergence, but it's more of a double top like sort of pattern than anything, because again, that divergence, as you're seeing over and over, it's taking a long time to play out. And not only that, anytime you get heavy drops or bounces, okay, anytime you get a heavy drop or a heavy pump, you're also going to very likely get some sort of divergence no matter what. And it's not always going to be a positive divergence. It could just be a false divergence. So here's another good example on the daily chart. You can see that price just keeps going and going and going, and you're going to have bearish divergence this whole way here, and you're just going to be continually fighting it against this trend that's continuing to push up here. And yet another good example. Now, again, we're seeing that these divergences are eventually resolving, but most traders are going to be getting either stopped out or chopped up along the way if they're just solely basing their trading strategy off of these divergences, because you can see that most times these are taking quite some time to really fully play out. I mean, here's another good example. Price drops hard here, and it's going to totally reset your indicator, which is going to make you think that you've got bearish divergence this whole way up here, when in reality, price is actually starting a bull run, and we're actually seeing that RSI is just signaling strength instead of actually signaling any kind of divergence, right? And that divergence is just going to keep you totally up here this whole time. You're just going to keep expecting a pullback, and it's just price is going up and up and up and up and up. So with divergences being said, you can still use RSI for patterns. You can see a really nice consolidation symmetrical triangle here, and you're going to notice that RSI breaks out here. Okay, so a little bit early. So RSI is actually breaking out before price action. So if you would have entered on this RSI breakout and even on the retest, which the retest would have occurred here. Okay, that's where the retest was at. If you would have entered on that retest, you would have gotten a really, really, really nice entry here for a nice little pop out of the symmetrical triangle. So RSI can be used successfully for, maybe bull flags or bear flags, or inverse head and shoulders, or even these triangle patterns, or just the trend lines themselves, because the trend lines on the actual RSI will hold some weight. So of course, make sure you watch those videos that I posted earlier. They will talk about if you're going to use these as divergences, or if you're going to use these for strength or for confluence with other strategies, looking at these key areas down here. Okay, which is going to be oversold and overbought. Oversold doesn't necessarily mean that you should just buy blindly, and overbought doesn't just mean that you should sell blindly. All right, a lot of times that's going to indicate the strength of the trend and where the trend is actually at that current time. So make sure you watch those videos to get a really in-depth breakdown of how to understand RSI and to use it more effectively when navigating the markets. Thanks so much for watching this video. If you guys have any suggestions for other video content, make sure you put it in the comments below. Make sure you're subscribed to my channel so you don't miss future videos, and I will catch you guys next time. Peace.